Hello everyone. So in this week we saw a very good retracement on both the indices, and this retracement or the weekly candle which is created due to this retracement is second largest candle after August 2020. So August 2020 was one such week where the fall was more than 6%, and here in this particular week the fall of Bank Nifty is about 5.25% and Nifty fall is about 4.77%. And both these indices now they are sitting right now below semi-annual pivot, and then it looks like a very scary sell-off. It looks like a very bearish kind of a scenario. But let us try and understand, let us try and decode, let's get into it and understand if it is really that scary or that bearish kind of a scenario, or it is going to be again a kind of a higher low, and from here the markets are like to lift off. Now I'm going to analyze these things in a bit details. So this video might go up to about 8 to 10 minutes or so. You have to go through this video again and again if you are taking some time to understand the concepts. And also if you are in a hurry, watch this video at a 1.5x speed, but try and watch it till the end so that you will understand the points which I am trying to elaborate in this particular video. Now what has happened, we were already into a weekly correction, and that weekly correction wherein we got a weekly 50 EMS support, and from these levels on 18th of November weekly candle it started to bounce. So there were 4 bullish candles, and almost that entire action of these 4 bullish candles is taken out by this one single candle in case of Nifty, and similarly in case of Bank Nifty as well. So this entire structure, it looks like the top is created, and the people who trade on the basis of patterns, they will be able to see a head and shoulder kind of a pattern over here, right? So if this head and shoulder is going to work, survive, and accordingly are we going to get a target for this particular pattern? Yes, time will tell us. But at present, what is in front of us, let us try to understand all these things. So last week's summary, if we take a look here, Saturday 21st of December, last week we saw Nifty range breakout was necessary for upwardly journey. Bank Nifty was expected to remain in the range of RBI policy day high and low of that particular day, and above the high of that day I mentioned that very quickly it should move to 54,000 and above. By far quickest retracement seen in indices after US Fed policy announcement on Wednesday, right? So this is the summary for this last week, and let us now understand each index like Nifty. Let's calculate Nifty first and then we'll come to Bank Nifty. So Nifty on one hand, currently it is sitting below semi-annual pivot, and as we can see the bounce has taken from this level of 23,263, and from there we have seen 4 candles, and then this is a solid retracement. This can be a solid opportunity is what I feel. Let's remove this path. Last week we had calculated these targets got completed, and now from this level let us remove this. Now this entire from this bottom to this high and this retracement, if we measure this, let me remove this part as well because we'll require to put another range over here. Now see, this is the bottom, significant bottom, and this is where we are currently. So from this low to high, so this is the high and this is the low. So right now we are sitting at a 78.6% Fibonacci retracement. So this level is going to be important. This 23,604 is the important level, and also to put it in a very simplified manner, the Dow theory, the weekly Dow theory changes once price closes below this level, the low of this particular 18th November candle. So this low is essentially important. Right now we are at a 78.6% Fibonacci retracement, which is an ideal scenario. Now if we go through this Fibonacci retracement levels, it is always said that whenever the bounce takes place from this particular level, so wherever the first leg of this fall or first leg of this correction completed, and from these lows when the market started to bounce, that is when people will have a very pessimistic kind of view. But when there is a retracement to this particular rise, the first retracement of any rise, that will have more pessimistic sentiments or emotions than the actual fall, right? So right now on this Friday, on yesterday or day before yesterday, Thursday or Friday, people will have more bearish sentiments. People will have a expectation that in next couple of weeks, 2 weeks, this should break and reach to a newer lower levels which we have not seen in the previous 6 months or so. It is very well possible. I am not saying end of the day market bhav bhagwan che, so whatever market is going to give us is going to be ultimate. There is no debate to it. But at the same time, this looks like a very healthy 78.6% retracement, and from here it can change the trend and start back vigorously, starting with the gap up opening on a Monday. That is also possible. So important levels for me here will be two important levels. Let me mark those levels so that it will be easier for you to understand. The first level is this 100% retracement, that is the recent low of 23,263, right? So this is going to be, this is the base, this is the basis of our bullish bias. What is the meaning of this? If at all this level is broken, if this level is broken on the closing basis, then the bullish bias ceases to exist. Then we will not look for a bullish bias unless these levels are again honored and price again starts moving in an upwardly manner. But that will actually complicate the Dow theory. Right now, if this low is broken, this low of 23,263, this low if it is broken, then the weekly Dow theory changes. And I really doubt if that is going to happen, right? So my expectation here is that we should see a gap up opening which is comfortably probably somewhere around 23,700, 800 level, or from here it should open and quickly start moving in an upwardly manner. That is what the expectation is. If it starts moving in an upwardly manner very quickly in next, let's say, couple of days, Monday or Tuesday, it will be very good sign for the next leg of bullish up move, right? This is what the expectation is. And then if it starts moving, then our first target, if let's say we take support at the current level wherever it is right now, so already price is closing above this 78.6% level. This is 23,604. Our closing is at 23,631. So we are already above this level. So it's just like a pin bar here, and from here I am expecting about 100-point gap up, and from that 100-point gap up opening we should head towards higher level. So my path, my expectation is something like this. From these lows we have reached to a high, right? From these highs we have seen this retracement here, and from here again we should start moving in an upwardly manner is what the expectation is, right? So the first expectation we have is it should open and give us a proper, let's say I have mentioned the range as well. If you can check here, so the range is 23,200 to 23,900 is what the expectation is. So from these levels 23,200 to 23,900 is what my expectation is. $23,800, right, or 900. This is what the expectation for the range is. It is more likely to break out on the upside than the downside, but if it reaches to these levels, then that is where our Dow theory changes. So we have to be mindful about this particular scenario. So obviously we are going to trade intraday. I am also expecting next 3 months, 3 to 4 months, look, you can say about next 4 months will be a critical period in market, in which I am going to create a detailed video about my outlook for the year 2025. But mota moti what I am expecting is something like we should be able to print an equivalent high or a new high, and then from there we should see the further retracement is what the expectation is. It can be in the form of a sideways action, or it can be in the form of a bearish action, but a very strong bullish bias for the year 2025 is kind of, I'm ruling it out. And why is that so? Probably in the next week during Christmas break, I will get some time to record another video, and that will be a detailed coverage for the entire 2025 outlook for both these indices, Nifty as well as Bank Nifty. So this is the range we are talking about, and if at all we get a bounce, then the target above this 23,900, the target can be 24,150, or maybe this gap is getting filled kind of, or this 50 EMA on a hourly time frame. So let us mark those targets. Let's say if we are getting a bounce, and bounce which is likely to be above this 23,900 odd level, then the next target for us will be 24,147. Okay, 24,150 we can say. My bad, it's 150. Right, so this is our target. This looks like a good target for Nifty for this particular week. If it goes quicker than this, nothing better than that, but at this point in time we'll take one day at a time, and we'll keep a close eye on the high and low of this particular range, right? So if this level of 23,263 gets invalidated, we'll not have a bullish view from there, and let us take one day from there onwards to understand the further trend. This is for Nifty and for Bank Nifty. Now before I jump on to the analysis part for Bank Nifty, I want to draw your attention to a peculiar observation. Let's say if you take a look on a monthly chart of Bank Nifty. Now this monthly chart of Bank Nifty is currently showing kind of a consolidation here. Now this consolidation is telling us a different story. This is a consolidation I'm talking about, right? Let's not draw this. Let's just watch this. So this is a consolidation that I'm talking about, and if this consolidation, whenever an important top or bottom that is getting formed, at that point in time these kind of consolidation usually take place. A top or bottom does not get formed in one single day. So if you take a look at the daily chart as well for Nifty, so before this fall there was a consolidation, and precisely for this reason last Friday when I mentioned about that this consolidation should break out, is because many times it is like a fake breakdown. So they showed a fake breakdown, they also tried to show us a fake breakout, and then it eventually gave up, and now right now we are sitting at about 78.6% Fibonacci retracement. So a very interesting fall in the last week, kind of a brutal fall. So this was a Monday, Tuesday, this is a FOMC announcement day, then next day it was a gap down opening, and after this trading day there was a FOMC announcement in US, and then gap down day and yesterday's selling. So we are pretty much standing at a 78.6% Fibonacci retracement. So this kind of a action if we are seeing on a monthly chart, so what is in store? So one has to be cautious for, as I mentioned, for next 3 to 4 months, I'll be cautious about my approach or my trading positions in the market. So this is how Bank Nifty is looking like, and Bank Nifty is also at a 78.6% Fibonacci retracement. Let me just remove this and place another Fibonacci tool here from this high to the recent low, right? So 78.6% level is 50,664, and we are above that. We are right now above that. So my expectation is it should open somewhere at a higher levels around 51,500 odd level it should open, and from there again similarly we'll have a target of somewhere 51,400 and 50,500. It's written in a wrong way, 50,500 and 51,400, right? So this is how it is. 51,400 is our expectation. So let me draw a chart here. $50,500 and 51,400. Right, so these are the levels. If we break above this, then in that case the next leg of target will be this gap. Okay, so this target should get completed. 52,000 we should see in a very quick duration time. Again, I am not giving very aggressive targets because this is going to be a Christmas holiday week. So if market is going to perform, that we don't know. There is a truncated week because on Wednesday we have a Christmas holiday. So Bank Nifty expiry is going to be on Tuesday. So it's a very small week. Monthly expiry of Bank Nifty will be on Tuesday, and Nifty expiry will be on Thursday. One of the day we should get to see some kind of a firework, and hopefully if everything goes well, if we exceed above this 52,000, then the next target for me would be 52,200 or 250, right? So these are the two targets that we are looking for in this particular week. For Bank Nifty and Nifty, both the targets I have shared, and we have to understand this particular phase till the time this structure is not clear to us, like if this low is going to support, if this low is going to be maintained, if this low is working as a higher low, or this is going to work as a lower high. So there is some kind of ambiguity in this particular trend. If we get a bounce, it has to cross above this for the next set of target that is far away right now. Let it just give us a follow up, and if we get a bearish follow up to this weekly candle, and if we break below this, then the calculation of target is much easier, simpler. If we break below these levels, if we break below 50 MA, then there is going to be another 3000 point fall in Bank Nifty. So we have to be cautious, understand, and take one day at a time. Don't be aggressive with your position sizing. Understand the stop losses, understand your position sizing vis-a-vis to your capital, and then accordingly trade in this time, and hoping, expecting that it should bounce back on a Monday, and then steadily we should keep on rising till the January SAP. So 13th and 14th of January is the period I'm looking where the market should give us a good rise, and we should be somewhere close to the new all-time high is what my expectation is. Let us see how market actually supports us. Thank you so much for watching, guys. I'm signing off. Bye-bye.